Good evening, everyone. It's exactly 6:30 here in the UK. My name's David Paul. I'm the Managing Director of VectorVest in the UK. And I'm speaking to you from sunny Notting Hill in West London here. A lovely, lovely summer's evening here, or early summer's evening, should I say, in West London. So, I have to start with this because VectorVest is pretty much the only investment education organization and software provider that's actually authorized by the regulator, the FCA. So although I'm qualified to give financial advice, I'm not allowed to do so in the absence of a long and a detailed fact find. I sometimes talk about shares that I hold myself, but I have to make it very clear that those shares, although suitable for me, they may not be suitable for you. So that said, we can move on and get into the more interesting bits. That's what we're going to talk about. We're going to talk about the VectorVest system of analyzing shares. We're going to talk about when it's safe to be in the stock market, when it's not safe to be in the stock market. And then I'm going to put it together at the end with our most conservative trading plan called worry-free investing. Okay, and that's what we're going to try and do it in about 30 minutes. So my promise to you is that if you hang around to the end, you'll be able to invest with confidence and consistently outperform the market in 10 minutes a day. And we're not talking about leverage trading here, long and short. I'm talking about an investment, a mechanical investment plan that if I was managing your money, I would put probably 80% of it into this type of plan. So that's me. I'm pushing 64, unfortunately. I've been trading in the markets of the world since October 1982. I put on my first trade in October 1982. And I was working for De Beers, the diamond people at the time, and I traded while I worked until April 1988, and April 1988 I cut the corporate umbilical cord for good, and I've been trading them on ever since. I suppose about 1999, 20 years ago, I started to do some seminars under duress at the institutional level, mostly training institutional traders, and did that for quite a long time. And I think over the last 7 or 8 years now, I've been helping retail traders improve their performance with the VectorVest product. And I manage VectorVest in the UK and in South Africa, where I lived for quite a long time. Okay, so that's me. And we're going to start with the VectorVest system of analyzing stocks. Now, in a nutshell, ladies and gentlemen, we want to be involved with the very best stocks. Those stocks that are undervalued, those stocks that are growing their earnings strongly, and very importantly for tonight's presentation, safely, that are rising, that are in the throes of a nice trend upwards when the general market is rising. And to that end, VectorVest puts a number to value, it puts a number to earnings growth, it puts a number to earnings safety, it puts a number to the trend of the share, and it puts several numbers to the trend of the overall market. And that's what we're going to look at in a little bit of detail at the start, and then I promise we'll get into the stocks themselves. So, the cornerstone of the VectorVest approach, ladies and gentlemen, is value. And we favor undervalued shares. And my grandfather many years ago used to say that the only way to make money in anything is to find the value of something and then pay less for it. And that's largely the value approach. Now, in some of our more aggressive systems, we can certainly be momentum traders, where we'll trade in shares that are rising above their valuation. But in this conservative, worry-free methodology that I'm presenting this evening, we favor undervalued shares, shares trading less than what we believe they're worth. And we put together in the VectorVest program, over the last 30 years odd, a valuation algorithm. And every day we calculate the value for every share in the London stock market. I'll show you some of them in 5 minutes' time. And the inputs, although there are numerous, are earnings, inflation, and interest rates. Those three things are combined to work out a valuation for every share in the stock market every single day. We firmly believe that every investor should know the following. What's the stock really worth? How safe is it? And is it rising? Is it falling? Or is it going sideways? When to buy, sell, or hold. The cornerstone is value. And as I said a second ago, we put a value to every share in the market every single day. Now, if you take a trial, when you take a trial to VectorVest, with the trial, you can download the founder's book. It's called Stock Strategies and Common Sense. And in chapter 3 of that book, Dr. Bart Toledo goes through exactly how he values every stock. So if you're quantitatively orientated, you can get your pencil out and go through that. Now, the first proprietary number is value. Now, the second proprietary number is relative value. And it's relative in relation to what the risk-free rate will pay over a period into the future. Now, that period is 3 years. So it's an indicator of the long-term price appreciation potential of the share in relation to what a AAA rated corporate bond will pay over the same period. It's rated on a scale between 0 and 2, like pretty much everything else on VectorVest. Above 1, the share should outperform what a corporate bond will pay. And above 1.3, we rank that as excellent. So I firmly believe that relative value is the most important number on VectorVest. It drives the share price. Very, very important number. The third proprietary number is relative safety, which is really important for tonight's talk. If you're a short-term momentum trader, not that important, but for a hands-off, value, worry-free investor, the safety and the predictability of the earnings is key. So what do? We download the balance sheet, the income statement, the cash flow projections of every company on the LSE. We buy them from Thomson Reuters. And the algorithm looks at these and looks at 17 inputs and spits out one single number which represents the consistency and the predictability of the financial performance. Again, on a scale between 0 and 2. Below 1 is poor. There have been surprises. Above 1, fair. And above 1.3, this is a company that's making money on all those financial ratios. I'm a mechanical engineer, so I struggle with them. All those financial ratios are getting better. Now, if you are a hands-off investor and you don't like surprises, then having a high relative safety will not completely eliminate the surprises, but it's going to minimize them enormously. So this evening, relative safety is one of the most important parts of our discussion when we put together the worry-free plan. The fourth proprietary number is a measure of the trend. And this measure is called relative timing. And this measures the direction, the magnitude, and the dynamics of the price trend. On a scale between 0 and 2, above 1, the share is rising. The further above 1, the faster it's rising. And then what Bart Toledo did is that he put together relative value, relative safety, and relative timing into the one single number. And for the very, very first time in my career, which is nearly 40 years in the investing world, I saw one number which incorporates both fundamental analysis, the study of value, and technical analysis, which is the study of trends and turning points. And as a default, all of the shares on the London market are sorted by descending VST. we're going to do something a little bit different later on. We're actually going to sort by relative safety, but the proprietary default is VST. We put a stop loss to every share in the market every single day. And the stop loss is calculated around a 13-week, 65-day moving average. But it's adjusted for the fundamentals. If the fundamentals are good, we give the share more room to move. If the fundamentals are poor, RV and RS are around 1 or below 1, then we tighten the stop loss. The stop loss is trying to weave that very, very fine line between protecting your capital and not getting stopped out 1,000 times. That's the royals flying into Kensington Palace. They go over and about 10 times a day. So the stop loss on VectorVest does its best to keep you away from getting stopped out and stopped out and stopped out. And if you're not careful and your stop losses are in the wrong place in the traffic, then you can actually die in a sea of stop losses. And actually, we had that discussion. I would not be at all surprised that that was a part of your drawdown. Certainly happens to most people who go into more aggressive trading. The algos know exactly where the obvious stops are. We put a buy, sell, or hold onto every share in the market every single day. Now, this can be used to getting in and getting out of the share. It's largely a trend-following signal. The only fundamental input is that the VST must be greater than 1. For a buy, the price is greater than the stop. The VST is greater than 1. The RT is greater than 1. And the price is moving away from the stop price. And clearly for a sell, the price is less than the stop price. And for a hold, the price is greater than the stop, but not any one of the other 3 factors need to be met. So you can get in and get out relatively easily with the buy, sell, and hold. But one of the main reasons we talk about the buy, sell, and hold is that it's an incredibly good measure of the breadth of the advance. And every day we measure the number of shares on a buy recommendation divided by the number of shares on a sell recommendation to calculate the breadth of the advance. And this little sell-off that we're seeing at the moment, in fact, it wasn't such a little sell-off over the last couple of days. In fact, we were getting a warning signal based on the buy-sell ratio. The price of the market was rising, but the breadth of the market was falling, and that always precipitates a sell-off. In fact, the indicator is so useful that we call it the canary for obvious reasons. Now, let's have a look at some shares before we go to market itself. If I go to VectorVest, this is the front page of VectorVest, which I'm going to do my best to describe in about 5 minutes' time. But let's look at some shares. If we click on viewers, we can see the shares in the London market. When you get your trial of VectorVest, folks, this is going to be empty. You need to click on Stock Viewer, and that'll populate the spreadsheet. Now, I am looking at a small share called Hydrogen. It was, in fact, every Monday afternoon I do a Q&A webcast, and we've got 200 or 300 people most days in it. I did it today. It's normally on a Monday afternoon, but clearly it was a holiday yesterday, and some exceptionally good traders in that particular meeting. Today, one of our best traders, a gentleman by the name of Steve from Edinburgh, came up with a share that he liked the look of called Hydrogen. Now, Steve is a relatively short-term trader. Exceptionally good short-term trader. So it's a name share. There's the code. It's a name share. But as you can see, and I hope you can see, it's trading at 75p. VectorVest believes that it's worth 118. So immediately it's undervalued, and it was up 2.5 pence on Friday. This is Friday's data, which was 3.5%. Now, that 118, ladies and gentlemen, is a proprietary VectorVest measurement. So you can see at a glance, or if we had more time, we could use Unisearch to actually do a simple search to work out all of the shares in the London market that are trading 10%, 20%, whatever you wish, underneath their valuation. And we favor undervalued shares, especially if you're a hands-off investor. Now, Steve is far from being a hands-off investor. That's the first proprietary number. Clearly, the price is not. You can get that out of the Evening Standard for free. The second proprietary number is relative value. Now, relative value looks at earnings, it looks at safety, it looks at lots and lots of things and compares them to what we'll get out of the risk-free rate, a AAA rated corporate bond, over a window of 3 years into the future. Now, this share has got a relative value of 1.64, and anything above 1.3 is rated on VectorVest as excellent. And those of you, the people that come to my Monday afternoon and seminars will know that I have my own rating above 1.5. It's called Bloody Marvelous. That's a really cracking number, and it drives the share price. It really does. Now, the next number is relative safety. And at 1.08, that's a fair number. If we go to Games Workshop, we go to JD Sports, they've got relative safeties of 1.47, 1.48. So this is a fair number, and I don't think this would make the cut for a worry-free type share. It's just a little bit low. RT is 1.38. And if we put relative value, relative safety, and relative timing together, it's got a VST, which is 1.37. Anything above 1.2 is really good. 1.3 is really good. We've got it's on a buy recommendation. There's the stop loss. And VectorVest believes that it's going to grow earnings at 38% next year, which is quite a clip. Now, if I right-click, folks, I can pull up a full stock analysis report, hoping the internet is okay. There we go. And for every share, we have got some good charting. This is summary charting. For every share, the report works through everything that I've talked about, plus see, the relative safety is fair. Timing is good. Overall rating is very good. I haven't explained the comfort index. It's a measure of the long-term trend. And growth rate, earnings per share, PE, sales. Sales growth is not great. Sales growth is not great. Okay, so a very comprehensive report on every share, not just this one share, on every share. Now, if I right-click here, I can pull up the chart. And that's the chart, folks. And as you can see, this in fact, the green line above the price data is the valuation. And as you can see, we're trading below our valuation. And down below, I've got forecast earnings per share. Now, this is a leading indicator. And over the last year, this company's gone from losing money to making money. Earnings per share has gone from 0 to 6 pence. And as that came in, VectorVest revalued the share. Now, one of the things that I've found most useful, folks, every weekend is to use Unisearch and to actually do a search. It's called Explosive EPS. And you can find all of the shares where the EPS is being ramped up. Now, I've got some moving averages on here. I use the same moving averages on every chart. I'm just going to get rid of them so we can... this pattern, it's on a buy recommendation. It's broken out of this pattern. And I think that I spoke about this afternoon, but my background is that I've been a technical analyst for most of my life, because I tried to do the fundamentals, but the darn things, as a mechanical engineer, I could never have the time or the inclination. This should be repeated on the upside. So as far as I'm concerned, the target on this little company, which would not be a worry-free share, the technical target somewhere up around the VectorVest valuation of 120 odd. So that's got a high probability of moving to 120. So at VectorVest, we're interested in undervalued shares, shares that are growing their earnings strongly and safely. And hydrogen is fair. And we want to buy them, ladies and gentlemen, when the general market is rising. And that's the next part of my presentation. But I've got a question here. Yes, it's being recorded. Oh, thank you, Simon. So kind of you to come in. It's being recorded. Let me just... Yeah, it's being recorded. For one horrible moment, I thought I'd missed the button to record it, but it's being recorded, certainly. So this share came, and that's the one really good thing about the Monday afternoon session. Just so much input from really great traders around the country that I try and share with everybody. Last Monday afternoon, we talked about DART. And as you can see, DART, also an M share, but DART trading at 9.57. We believe it's worth 12.82. So it's undervalued. RV, a cracking 1.44. Not quite bloody marvelous, but excellent. Relative safety 1.28, just a tad under excellent. So that would be certainly a worry-free candidate. The relative timing 1.47, and as a result, when we put those together, it's got the third or sixth or seventh highest VST in the pack. It's going to grow earnings at 20% next year. This is a great little company. So that shares up 6 to 8% since last Monday afternoon. Also last Monday afternoon, we spoke about Fair FX. And as you can see, Fair FX has had a great week. It's up, trading at 117. We believe it's worth 177. Now, the RV is in bloody marvelous territory because it's above 1.5. But the RS is saying that there has been surprises here over the last 5 or 6 years. When the algorithm looks at the balance sheet, the income statement, the cash flow statement, then there's surprises, there's ups and downs on those numbers that it doesn't like. Okay, unfortunately, the leopard doesn't change their spots. So there has been ups and downs there, so that worries us. It would not be a worry-free type share. It would be a momentum share, but it looks like a good momentum share because if I pull up the chart, there's the chart, folks, and I'll have to take off my targets from this afternoon. That's our valuation up there, and the share. Can you see the surprises, folks? There's the surprises. All right, the share has come back, and it's now broken this long-term trend line. And I think, folks, that this thing is only starting on its way. Again, last Monday afternoon, we looked at the weekly trend, and the weekly trend looking exceptionally positive indeed. But this is what we do at VectorVest, folks. Ashley asked, can I make him a millionaire? And yes, I think I can. I'm not saying we're going to do it overnight, but I think that if you were to start and you've got a little bit of time, that over a few years, that you can build significant wealth by being an investor in undervalued shares that are growing their earnings strongly and safely, that are rising, and you want to be active in the market, ladies and gentlemen, when the general market is rising. Now, this is October, November last year, and I assure you that the general market was falling. And clearly, those of you that have got the experience when the general market is falling, then you can be active short in the market. But being short of the market, your skills have got to be much better than if you're long in the market. And when I say that to people, they just shake their head and they say, well, it must be the same thing. It's not. okay, and ask any trader that's been around the block. This is a very powerful pattern, this pullback pattern here, especially when you get it at a trend line, and on the weekly chart there's a very strong change in direction, and I explain all of that on the Monday afternoon seminars, and with, I don't mean to sound pompous, but there are many people selling the same sort of stuff for many thousands of pounds, and all comes with the VectorVest membership. So those are a couple of examples of undervalued shares. I think one of the greatest examples is JD Sports that you all know, and this is JD Sports, folks. Let me get all my stuff off it. I told you I'm a technical analyst, but October, the general market started down. This is when the Fed said they were going to put up interest rates in America by 3 times during 2019. And then at Christmas time, I've been watching that Fed since 1982, and the turnaround in the Fed policy was the most abrupt that I've seen in all of those years. And since January, this is JD Sports, you all know JD Sports has moved from 350 to 630 in that period. And that's a really good example of a share that's in fact growing earnings strongly, undervalued, and then it breaks up the page. Can you see the VectorVest buy recommendation? You didn't get the bottom, but it didn't do too bad. So that's the process, folks. Now, one of the most important parts of the process is the market rising or falling? How to accurately determine market direction. Now, many people say that you can't do this. Our mantra is to buy rising stocks and rising markets. And in our worry-free methodology that I'm going to speak about now, we're only buying the market. In other words, buying a share at 10 goes to 12, happiness. Clearly, if you sell short a share at 10 and it goes to 8, that's also happiness. But not many people are uncomfortable with selling something you haven't got. And in the UK, you're going to have to open up a CFD account to do that, because if you're relatively small, the broker will not go out and fetch the script for you. At least he won't do it for me. So for most of us folks, we're going certainly to start. Ashley, until you've got that million well underway, sir, I think you should be buying rising stocks and rising markets. All right. Shorting is more difficult. And again, our founder, Bart DeLito, says being on the wrong side of the market is the worst thing that can happen to an investor. It doesn't have to happen to you. In October, November, December last year, unless you were short, i.e. making money when the market falls, it was nigh on impossible to have made money in the stock market in October, November, December. But in January, February, or March, April into May, it's been quite easy to have made money buying stocks. Quite easy. So if you want your trades to go well, to go quickly, so that you're in the black, so that you're not staring at a report from the brokers that's got an awful lot of red in it, make sure that the general market and the sentiment and the tide is at your back. It's easy to ignore market direction. And market direction, folks, there are cycles within cycles, but market direction is like this fairground roller coaster. I have an MSc in metallurgy, and I don't go on them because those rusty bolts scare me. But they take years to get up there. The last time I was on one of these contraptions, and they fall very quickly. Am I correct? Is that still the case? And the markets are pretty much just the same. They take forever to get up and they fall very quickly. So at VectorVest, and I'll go into the program and I'll show us this in detail now. I'm still okay for time. Let me just do this in the program. Much easier, I think. Discard those. Easier to see a little bit, I think. First of all, this is the front page of VectorVest, and the advice couldn't, I think, be more in your face. VectorVest does not advocate buying stocks at this time. Now, one of the most difficult things to do is to just get yourself out of the way and do what the damn thing tells you to do. And we all want to be clever, and our egos like to prove that we're the smartest knife in the drawer, the sharpest knife in the drawer. Now, this represents, ladies and gentlemen, the short-term trend of the London market. And at the moment, for the last 4 days, we've got two words here. And those words today, as we went into the trading this morning, remember this is Friday's data, down, up. I hope you can see that. Down, up. The first word refers to the short-term trend, and the second word refers to the long-term trend or the underlying trend of the UK market. I'll show you the market in a chart in a second, but you do not need to have any chart reading experience or interest to work out what the general market is doing. It's on the front page of VectorVest, summarized by these two words. And today it's down, up. And as you can see, for a very, very long time, it was up, up. Short-term trend was up, the underlying trend was up. And today we've got a down, up, and because the short-term trend is down, VectorVest does not advocate buying stocks at this time. I've got a question here. The data will be up, Andy, the data will be updated about 8 o'clock, 7:45 normally. Maybe while I'm still speaking here. Now, on the right-hand side, we've got a signal called a C up. Now, that means a confirmed up. And that means that the underlying trend has been confirmed by price action. Now, the confirmed signal is what we use for worry-free investing. And ladies and gentlemen, you should be buying your shares when the underlying trend has been confirmed by price action. In other words, we see a confirmed up here, and the pointer is firmly in the green. And when the pointer is firmly in the green, the advice will say, VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So, at the moment, the short-term trend is down, longer-term trend or the underlying trend still up, and that's still confirmed by price action. But we shouldn't be buying any shares because remember, the short-term trend is down and small ships turn the corner before big ships. So and that short-term trend could quite easily keep going, and we get a red signal here, folks, which would be confirmed down. Now, this confirmed up has been in place since the 9th of January. So let's just look at the London market itself. Now, first of all of this is on your smartphone, so I don't care how busy you are, you can actually tell whether the market is rising or falling, C up or C down. You can tell when it's a day to buy stocks and when it's a day not to buy stocks, because if it's a day to buy stocks, we'll have a confirmed up and the pointer's in the green. And you can tell immediately that it's a day to buy stocks. If you short the market, okay, well, you should see a confirmed down here. It'll be in red, and the pointer should be in the red. And that's a day to short stocks. Okay, so we can't make it any simpler than that. You don't need any charting skills whatsoever. If I go to timing, I can pull up the UK market. Here we go. There's the UK market, folks. Put it up over 6 months, a bit more than 6 months. So we can see the last signals. And this is the VectorVest composite of the UK. It's a composite indicator of all of the shares that we follow, equally weighted. We believe that an equally weighted index reflects the sentiment of the market much better than a market cap weighted index such as the FTSE 100 or the Dow 30, where Boeing has got 12% of it skewed it completely. So down below we have the market timing indicator, which is a very sophisticated tool which looks at a rate of change of the VectorVest composite and a rate of change of the buy-sell ratio. And if you remember earlier, I said that we put a buy recommendation and a sell recommendation every share in the market. And every day we keep a tally of the number of shares in a buy divided by the number of shares in a sell. That's our measure of the breadth of the market. And in the MTI, we put together a rate of change of the price and a rate of change of the breadth of the market. And ladies and gentlemen, when the MTI is above 1, the underlying trend is up. When the MTI is below 1, the underlying trend is down. And when the market has moved our way for 2 weeks in a row, that's the confirmation by price. And if I click this little button here, I've got the confirm call signals for the last 7 months. On the 5th of October, we got a confirm down. Now, confirmed signals are really serious because the market participants are voting with price and breadth of the market. And then all hell broke loose, and we were about to slit our wrists just before Christmas when the Fed blinked. They turned on a tikkie. Tikkie is a South African 5-cent piece. And on the 9th of January, we got our first signal of 2019. Now, we have short-term systems as well for swing traders, but tonight I'm not talking about that. I'm talking about our longest term, most conservative signal, which is shown on the front page of VectorVest by a confirmed up signal in green. And on that particular day, I remember it exceptionally well. On that particular day, we had a confirmed up and the pointer was in the green and the advice was good. Now, in this period, ladies and gentlemen, the short-term trend was down. In that period, the short-term trend was down. In this period, the short-term trend was down. And at the moment, the short-term trend is down. Now, here, the short-term trend was down, and VectorVest in those days, VectorVest advocated not buying any stocks. And then as it turned back up again, we got our first up signal somewhere about here where it was good time to buy stocks. And similarly, if this turns around, we'll get another bite at the cherry up here. Okay, so we should be buying stocks, ladies and gentlemen, when there's a confirmed up and the pointer's in the green and we're just doing what the program tells us to do. Okay, simple as that. Now, I'm running off a little bit later than I wanted to, but we're now going to talk about our worry-free methodology. If I was managing your money, I would put 80% into worry-free, and I would put 20% into maybe more aggressive swing trading, which I've been doing for a very long time. But I would put most of it into worry-free, into shares that are growing their earnings safely, collect the dividends, and hopefully make 17% capital gain and 2 or 3% dividend, and all my customers would be happy. Unisearch can automate this process for you. I haven't got time to go into it in detail, but it's a tool that can allow you to search for anything you wish. So if you want to find undervalued stocks with a high RV that pay a 2% dividend yield, you can do it easily on Unisearch. Dr. Toledo believes, as I say, good portfolio management starts with buying the right stocks. The parameters need to be robust, tested, and realistic. In the worry-free methodology, we don't want to be trading a lot, and I've tested this over the last 20 plus years, and on average, it produces a trade every 6 weeks. That's all. And very importantly, it needs to be able to be scaled. It needs to be able to be used by people who've got a £10,000 account when they start to somebody who's got a £5 million account or more. Now, there are many methodologies that are fine for small accounts, but just don't work for big accounts, and vice versa. So this scales very well. Now, the key for worry-free investing, ladies and gentlemen, is relative safety. We want the relative safety to be well above 1. We want earnings to be growing, the earnings growth rate to be above inflation, well above interest rates. So rather than sorting by VST, in our worry-free investing, we're going to sort by relative safety. And there is the search that I can write in UniSearch. It's a standard search. It's a pre-programmed search. It's under retirement. We want to show you how to put that million together for retirement. It's not a get-rich-quick scheme. I assure you, if anything, it's a get-rich-slow scheme. We're looking for shares that are above 50 pence. Reasonable volume. The 50-day moving average of volume is 50,000 shares. Not on AIM. Now, there's some great companies on AIM, but not on AIM. The price of the share should be less than the value. We're favoring undervalued shares. And the stock should not, that little double arrow means not be on a sell. So it can either be on a buy or a hold. And the shares from that UniSearch are sorted by RS descending. So it brings the shares with the highest safety and the highest track record of making money to the top of the pile. Now, we use the confirm call signals to get in to the market. So the last confirm call was on the 9th of January. So I'm going to do this for you. If I go in to VectorVest, if I go to UniSearch, and I've already called up under retirement long-term winners RS descending. It's there. And that's the search we talked about a few minutes ago. Now, I want to go to the 9th, and on this little calendar, all the confirmed ups are actually marked in green. So we got a green confirmed up on the 9th. If I click on the 9th and run the search on the 9th, now the one thing that I can assure you, ladies and gentlemen, that there's no fiddling on VectorVest. We offer our services on a month-by-month basis. My promise to you is that if I can't make you money, if we can't make you money, then you can stop it at any time. So there's no point in bullshitting, okay? There's no, you can test all of this to your blue in the face. If I quick test the top 15 between the 9th of January and today's date, that's what's happened, folks. The market is up 6.5%, but this portfolio is up 17% in that period, which is 55% annualized. Now, I won't keep this up because I assure you we'll get a confirmed down throughout the summer. So there are good parts of the year. There's times when it's really safe to be in the market, and there's times when it's not. The really nice thing, of course, is that there's no losers here. And I assure you that when you look at your portfolio and there's not a loser in sight, there's a swagger about you into the golf club on a Saturday afternoon. Okay, so it's really, really important. When things are going well, it gives you enthusiasm, you do more work, and it grows. If you look at your portfolio and you've got 12 shares and 6 are underwater, it's quite miserable. You never look at the things again. So that's a particularly good performance. So that's the basis of the worry-free plan, folks. Since the start of the year, it's up 24%. Okay. And that's what we want you to do. Now, I've tested it over the last 20 years, 25 years, and it produces on average a 17% compounded rate of return, not counting the dividends. And most of these companies pay a very healthy dividend indeed. So if you're wondering how you can make this happen, how you can actually create this for yourself, you've got a choice to do. Now, there's yours truly trying to do it on his own. And when I started to invest in 1982, I tried to keep the fundamentals under control. I bought a book called How to Make Money in Stocks by William O'Neill. And I did my best to try and keep his CAN-SLIM methodology under control. And that was the annual reports all piling up in the corner of the office. So I traded technically alone without the help of the fundamentals. I've got a question here. Well, Andy, if the market changes to confirm down, then you just need to watch your stop losses very carefully indeed. Not buy any more stocks. If you get stopped out, you build a cash position. And when you get the next confirmed up, replace so that you're always fully invested when the market is rising. So I tried to do it myself. I couldn't. And over the last few years now, I've got VectorVest to do all the heavy lifting for me to break out of this maze where I just didn't have the time or the inclination, to tell you the truth, to fight with the annual reports. I'm a mechanical engineer. Every time I get my mind around accounting, the sods change it. So if you give me 30 days, we'll use VectorVest to turn your portfolio around, even if you've never been through a market before. And that's with my Successful Investing Quick Start course, which is part and parcel of the VectorVest product. The objective is to consistently outperform the market in 10 minutes a night. And I've mapped it out in this little roadmap. The first part and the first lesson, which is about less than half an hour long, is more detailed approach of what I just talked about. How to, in fact, analyze any stock for value, safety of earnings, and trend in less than 30 seconds. Remove information overload, separate the good from the bad, and analyze any stock very quickly indeed. The second module is all about getting rid of bad shares, all about position sizing, all about minimizing losses, maximizing gains. And many people have got to do that at the outset because they've already got a portfolio and they've got 3 out of the 10 shares are going the wrong way. So getting rid of the losers very quickly indeed. The third is becoming a green light buyer, and this is all about market timing, knowing when to buy. And we call that a green light buy. So there's a full lesson on how to actually know when it's safe to be in the market, and also a lesson on how, in fact, to use the shorter term signals for shorter term trading. Week number 4 is all about finding the very best stocks for your portfolio. So in week number 1, we analyzed stocks. Week number 2, we get rid of the bad ones. Week number 3, we showed you when it's safe to be in the market. And week number 4, we've replaced the bad ones with good ones. And then week number 5 is a management plan to try and put it all together. You're only as good as the plan. And folks, in the States, they charge $475 for that. But we're new in the UK. As I say, fully authorized by the FCA. And if you give me 30 days, and even if you've never been anywhere near a market before, using the knowledge from these 5 modules, we can make you a winner. And in the UK, we're doing that for £5.95, so it's not going to break the bank. To do this, Andy, you don't need anything else, and you can try it. You can try it for £5.95 because I'm giving you 30 days access to VectorVest UK and VectorVest USA as well as the courses. So you're going to get access to the Successful Investing Quick Start course. You're going to get access to VectorVest UK and VectorVest USA for a full 30 days. That's £49 worth of value already, plus the course. And of course, you're going to get access to my weekly sessions. There's two of them. I do one, and a colleague of mine called Glenn does another one from the US. And that's another important thing, folks. If you develop the skills to invest in the UK market, those skills can be replicated in any market around the world. The VectorVest approach is common to all markets. If you're interested, vectorvest.co.uk/SIQSC, and you can avail yourself of that offer. We've done this for thousands of people around the world. I would have thought 2/3 of them, are probably more than that, are in the US. I worked with this guy personally, and he says that after all these years, he's finally got a written plan. And folks, if you don't think it's the best £5.95 you've ever spent, then you can have your £5.95 back with the greatest of pleasure. So in summary, if you give me 30 days, if you've got a portfolio, I'll turn it around. If you haven't got a portfolio, if you're brand new, I'll show you how to actually build wealth slowly but surely using VectorVest. VectorVest can be used as an aggressive tool as well. I haven't had time to talk about that today. So that's our offer, folks. If you're interested, those plug-in modules are all American add-ons, Andy. Yeah. Omaro, it's £5.95 to try it, and then if you want to go ahead, it's £49 on a monthly basis for VectorVest itself, and it's on a month-by-month basis. If you want to stop, you stop anytime. There's no effing and butting and talks. If you want to stop, you stop. We're fully authorized by the FCA. And I assure you, I'm not going to put that at risk. So we want you to be a customer for the next 50 years of Mario, and we need to take very good care of you in the next month. Okay, so I've run a little bit over, ladies and gentlemen. I'm sorry about that. What I've tried to do tonight is to try and show you what VectorVest has done, and that's what it's done since the start of the year. The market's up 9%, and the worry-free portfolio is up 24%. So even if you've never been near a market before, the VectorVest approach focuses on undervalued stocks that are growing earnings strongly and safely when the general market is rising. And through our 5-module course, we'll show you exactly how to get that under control so that you can be a winner in the stock market. £5.95 for all of that. Then you can make your mind up as to whether VectorVest is for you or not. Thank you very much, everyone. Take care of yourselves. Omaro, I think the first step is educating yourself, okay? The first step is educating yourself to get yourself. It's going to cost you £5.95 to test it. So the first step is education, Omaro, if you want to make that money grow. Otherwise, you'd be throwing it away. So try it and see if it's for you. So it's VectorVest.co.uk SIQSC. There we go. SIQSC. See quite a few familiar names in the room. We have user groups all over the country as well. And I'll be going to the user group in Taunton, where I see Keith from Taunton in the room. and I'll see him there on Thursday night, and going to the user group in Birmingham on Saturday morning. Next week I'll be in Guildford. So we have user groups in London, user groups in Guildford, Taunton, Manchester, which is tonight, in fact. I won't be there. Birmingham on Saturday. Edinburgh, I'm going to Edinburgh at the end of the month. Belfast and Dublin. So we have user groups around the country supporting our people. Yeah, Mario, if you want to test, then just go to vectorvest.co.uk/SIQSC. All right. Thanks, Andy. I look forward to working with you all, guys, over the next month. Thanks very much indeed. Bye-bye.